Paul, thanks for being with us. Have stocks pushed aside some of the COVID concerns? We're seeing some new highs in the Russell and some action in technology, for example. Peloton's at a new high. What is your sentiment overall?
So good to see you as always. And you're right, there's been literally a tsunami of new highs basically across the board. I mean, the rising, as hard to believe as it is after such a meteoric rise, but the rising tide continues to lift all ships. Counter that with, you certainly have epic greed and euphoria, the likes of which we've only seen during the dot-com bubble. The greed and euphoria is worse than last year pre-COVID, worse than January of 18 and January of 17 and Q2 of 2011. The difference now is the foundation of the market is much more structurally healthy than at any of the other times where you saw so much euphoria. So to answer your question in a long-winded fashion, I think you're going to have some kind of quick, short, sharp 4 to 8% decline at a minimum this quarter-ish. Perhaps it runs into Q2, but that's what normally happens when you get this level of euphoria.
I see. So a little bit of a pullback, which I guess you would call a buying opportunity. You'll tell me. But I did read through your notes where you were talking about greed and euphoria and looking back. You said it's not quite the greed and euphoria of the dot-com bubble, but it does outpace some other times like the beginning of 2020, for example. That being said, you have some names that you do like. Tell me a little bit about a name like Salesforce, also a pizza name. Tell me some of the names and stocks that you do like. Would you be buying these on a dip?
So to answer your first question, then go into names, unless or until the foundation of the market weakens, until it crumbles, until participation wanes into rallies, or leadership becomes into staples and utilities, or really bonds rally significantly, or the dollar really rallies. You have to view every dip as a buying opportunity. As crazy as that may sound, that's what you have to do. I have no problem selling stocks into the run. I'm having a tough time finding new names that are in my list. The three I gave you, so the first one was Papa John's. I gave you three that have not soared, so it's a little more comfortable to buy them. You know, Papa John's, we like Domino's during the crisis. I like Papa John's much more now. The next move in Papa John's is probably 102 or higher, and then on its way to 150. It's certainly a COVID stock, if you will, but this country's eating habits have changed, and eventually there'll be regulations on businesses, on restaurants. The big ones with cash are going to survive like Papa John's. So that's one. Salesforce is another one. So I sold all the Salesforce I had, which is not a lot, into the news that it was going to be added to the Dow last summer. Stock went crazy, and that's, to me, that's an easy selling opportunity. So we sell into that now. The stock's down from 284 to 215-ish post-Dow news. It's given back all that gain. The fundamentals are catching up with the stock. The stock's always expensive anyway. It's not going to be a value, but it's certainly not as expensive as it was over the summer. And listen, it's the dominant player in the CRM industry. It's an amazing double-digit earnings grower, and that one at more reasonable levels now is a buy. And Cardio Systems was the other one, medical device maker. Again, I'm trying to find things that look more comfortable to buy. It's not a money winner, but it continues to 3 quarters in a row. It beats earnings by the slightest amount. It is in a good position price-wise. I think a 10% rally from here is 50-ish. I think it hits 50 and then 60 either later this year, early next year. All three, again, are in that better price range where they haven't done a Tesla or a Bitcoin where they could hit a pocket of air and collapse. These are at least a little more comfortable.
Cardiovascular Systems, CSII, folks. So it's at 44.81. You said it could probably go to 50 and maybe even, work its way up to 60 in, a longer period of time ahead. I thought the story about Salesforce is interesting because you said how it ran up, on the announcement that it was going into the Dow Jones Industrial Average. We saw some of that with a name you just mentioned, which is Tesla. And Tesla ran up, had its stock split, and everybody still bought it, and they were buying, obviously, more affordable and going into the S&P 500. Now it's in. and it's not too far off its record highs. Is this the kind of name that you would take some profits now and then buy it back when it dips down, or do you think it has room to run?
So because the stock melted up the right side of the page, in the way I invest money, I would always continue to take little bits and pieces off as it goes vertical. Tesla is an unusual stock. Tesla is the new Amazon. Amazon always went up in the face of essentially no profits. They plowed everything in the business. They grew the revenues. It was a story stock. Tesla is among the only ones in this environment that's being afforded the same luxury. It is more of a story stock than it is more of a fundamental play on what's going on. So for me and my clients who do own it, I peel back a little bit on each run, and eventually they'll be left with maybe half the position they had. I'm okay with that. I'll look for other things like Papa John's or Salesforce. But the Tesla story, you have to be a believer to close your eyes and just hold it forever, like Ron Barron has, to his credit, and ARK, the ETFs, and Kathy have. I'm just not that believer in those vertical story stocks. I like to peel off. I like to play a little defense along the way. I'm not going to look to sell the top tick in Tesla down the road. I have no problem taking some profits and finding elsewhere to go.